Hey everyone, I'm here with David Schwab. Hey David.
Hello, how are you?
Great, how are you?
Really good.
Good. And Dave's with Prime Lending, and we were talking about the new legislation on conventional mortgages can waive the appraisal. Is that right? Or how does it read exactly?
A lot of times it's actually just in the findings through Fannie Mae and Freddie Mac.
Okay.
Um, and um, it used to be mainly on if uh, were below 80% and all these other parameters.
Mm-hmm.
Um, but they've recently kind of updated that just with all that's going on to actually improve the probability that an appraisal waiver will occur.
Why do they want the appraisals to be waived?
So I think in the present situation, it's more just trying to prevent any what would possibly be deemed to be um, just unnecessary personal interaction with an appraiser coming to a house. So I
Okay.
think that's the number one reason right now. But traditionally, the appraisal waivers are it's only on conventional, like you mentioned,
Mm-hmm.
and it's traditionally higher credit scores. And actually, what happens is the behind the scenes system with Fannie Mae and Freddie Mac, their underwriting engines do kind of behind the scenes. They look at the address, look at the value that we've entered in as a loan officer,
Right.
um, and it kind of determines whether or not that is a reasonable value for a home in that area. And as long as the customer is has a good credit history and things like that, and then
Mm-hmm.
the housing in that area supports that value, then that's when
So
it
are
kicks
they,
in.
how are they knowing that? Are they just comparing it to their other loans or are they asking for some documentation?
No, there's no documentation, so that's a
Yeah.
data upload.
Okay.
Um,
So it's just
that
based on the other data in their system.
exactly. Yep,
I can,
they update it,
uh-huh.
and they just recently did that. And also, so not only did they update the information that they go off of, but also they updated the parameters that are there, um, making it even happen on like a cash out refinance or on purchases. It's happening. It's becoming more prevalent.
So, okay, I can see, can like investors do it when they're buying investment property?
Typically, it's only on an owner occupied property.
Oh,
Yeah, or
boo.
second home, So yeah,
Okay.
investors, unfortunately, um, that's not saying that it's not coming down the pipe.
Right.
Things are kind of changing rapidly right now, but typically on an investment property, they want to see an appraisal, just because there's a little bit more to that, as far as the income from the property, things like that.
Sure. So on a cash out refi though, are you like, are banks, well, I guess is prime lending, is it have to be like they're only lending a certain amount, right? Like you're not lending 100% of the value. How is the bank, if there's no appraisal, how is the bank determining what they will lend?
So it's going to be 80% of the value
But where's the value
of
come
the home.
from if there's no
The value.
appraisal?
So it typically is just whatever we put in. Now you can't just take like let's say a house that's $300,000
Right.
or something like that and pump in like, hey, 500,000. Hey, okay, everything's good to go.
Yeah.
Now, now I'm over, I'm underwater on my house.
Right.
You can't really do that because there's a sniff test, a pretty. It's still a good sniff test to make sure that the value is in fact there. Um, on no matter what type of transaction it is, whether it be a purchase
Hmm.
um, or refi. And then at the end of the day, like for example, on a purchase, um, most of the time, I've always been under the impression, or my thought process is, the real estate agents involved on a transaction have already kind of vetted this, this offer and this value that, somebody's offering to buy this house for X amount of dollars. A lot
Right.
of homework has already gone into that. You know what I mean?
Well, I mean, that makes sense on like a straight conventional.
Mhm.
I mean, the value of the home is really what the buyers and sellers
That's it.
have
That's
agreed to
exactly.
pay. So it makes sense if you're going to waive the appraisal, because then it shortens the time from closing, which is
Yep.
really good. I mean, we need to do that anyway as an industry.
Yep.
It takes way too long to close.
Yeah, it can. Yeah. And it lowers the price too, the cost to the customer. So that's nice
Yeah, because an
because
appraisal is costing the customer what, like 400, $500?
so you have kind of you have several, I guess, feeders on that. So one, a lot of places have, not only your appraisal fee, like, like you said, 350
Mm-hmm.
to 450, but
Uh-huh.
then now some lenders, we don't, but some lenders use a third party appraisal management company that also charges an extra amount. So you can get up to like, $500-$600 on an appraisal pretty easily.
Okay.
And this really saves that. And at the same time, limiting personal interaction, with a customer and an appraiser.
Sure. I mean, the appraisers, in my experience, are only there for like 2 seconds anyway. So it always baffled me, like, how they would get the value of the home. And I realized they go into the multiple listing service a lot of times
Sure.
and
Yep.
look, but like, that's what we do.
Yeah.
That's how we valued the home in the first place,
Yeah,
like,
exactly.
so
Yeah.
it's frustrating. But I would think, though, there would be some people that would say, is this going to be the beginning then of another 2008, 2009 if we start not having appraisals? Like, what's been in place?
Yeah.
What's the sniff test that's like different than before?
So I think lenders, and just really a lot of players in the mortgage industry across the board kind of learned their lesson back then.
Hmm.
That was a different time to where a lot of things were happening, even leading up to that, where
Hmm.
like the movie The Big Short, it's a great movie, and you have some people, that the focus there wasn't necessarily on the property, the collateral.
Right.
I feel a lot of the focus was also lending to people that maybe wouldn't qualify if we didn't have some workarounds, and maybe should not have qualified, obviously,
Right.
if we didn't have certain workarounds. This is more on the property, and there is, like I said, kind of a behind the scenes check on, okay, hey, first off, like we already established, you have to have some good credit history in order to qualify for it. But then even then, there's an additional step just to make sure that, hey, you know what, the collateral, the values in this area do support this, and kind of give it a check. And so, the risk there is pretty low. And
Okay.
then let's just say that you have a customer that is buying a house, and you guys have you've gone, and as you do, take great care of your customer and do all your homework, and hey, here's what we're going to offer and all that stuff. But let's say at the end of the day, they still want to have an appraisal done. There's absolutely no reason they can't do that. So,
Okay.
just because there's a waiver, doesn't mean that a customer cannot have an appraisal done. They can opt out of that and have it done if they want, just to make sure, hey, you know what, because some people want that peace of mind.
Got it. So does it apply then to all conventional borrowers, or are there restrictions inside of that,
It would be all except for like we talked about, like the
except
investment
for
property.
investment
Yeah,
properties?
I've
Okay,
actually
owner
seen it happen a
occupied.
lot.
Mm-hmm.
I've actually seen it happen a lot on second homes, and I almost feel like, I don't know. I feel like somewhere in the system, they realize that, hey, if I have a second home, it can't be within a certain mileage of my current home, my primary
Right.
residence, and there has to be a reason why you would have a second home. You can't have a primary residence in the northern suburbs of Cincinnati and then a second home downtown. It just doesn't add up.
Right.
Um, and so I feel like the system almost knows that, and it's becoming even more customer friendly because they know that, it's going to be difficult for someone to show up at the property to let the appraiser in, perhaps. It's almost things like that, to where it's like, keeping the customer at the center and really being, like you had said, to avoid an issue like we had in 2008. I feel like they're making sure the I's are dotted, the T's are crossed,
Mm-hmm.
to where, okay, at the end of the day, this all makes sense. It's not something that we're really kind of bending the rules to, perhaps get
Make it
somebody in a
fit.
loan that, yeah,
Right.
exactly. That
I
shouldn't,
would think
or
though, like
something.
the people that would benefit it from the most are the people that want to shorten the process. Because I mean, when you're buying a home, $500 is usually, if you're spending, two, three, four, five, $800,000, it's not a huge money savings. I wouldn't think that that would
Right.
be the major reason. But if you're trying to shorten the time from pending to close, that could
That's
be
it.
one reason to waive it. Are you finding other people waiving it for other big reasons, or is that pretty much it?
That's the biggest thing is, hey, you
Okay.
know what? I've already worked with my agent. We've pulled up the
Mhm.
MLS information. I'm comfortable with this sales price. And
Mhm.
then you also do, there is, like I said, a check with Fannie and Freddie that behind the scenes, they kind of run an analysis and, hey, you know what? Yeah, that is a good sales price for that property. Um, and, I think that one of the bigger things towards the beginning the, of the process on the purchase is that inspection. That's an entirely different ball game, and that's something
Right.
that actually is value added for the customer. As to where the appraisal, especially on a purchase or just like a rate and term refinance or whatever,
Right.
doesn't carry that much. Hey, you know what? On a refi, I'm improving my situation. I'm making my home, even more affordable than I had it before, or I'm saving my
Right.
money some other way. Or on a purchase, like you said, the agent does their homework.
Yeah.
And yeah, so
No, that makes a lot of sense. Yeah, it's weird. I mean, I like that we're moving more towards like a streamlined and friendly process from beginning to
sure.
end. Because I know for buyers, there's so many people involved, and you're right. Like half the people, you're like, what exactly do they do? Like, why
Yeah,
do I need them again?
yeah,
So I'm glad to see us heading towards simplicity. I think it makes a
yeah,
lot of sense.
absolutely. And where it makes sense, like
Yeah.
on a construction loan, or we do like we talked about in our last meeting, we have renovation loans, things like that. Hey, you know what? There is certainly a need for an appraiser. You know what I
Hmm.
mean? They need to be able to, um, justify, hey, you know what, here's the improvements we're going to have, like on a renovation loan. You're not going to get a waiver on that because there's so many things that feed into, okay, here's the value now, we're going to renovate this, and then here's going to be the
Hmm.
value after that. Obviously, there's a certain need for that. But if it's just like a basic transaction, customers' credit score is great, that fits the mold to where, hey, you know what, let's save some time, let's make sense here and just get this,
And just get it
get from
done.
A to B faster. Yeah, exactly.
So this is a national thing. It's not just state by state, correct?
Yeah, it's all in Fannie Mae and Freddie
That's what I
Mac's
thought. And
kind
it
of
came out like
algorithms.
October, didn't it, of 2018 or something like that,
So
September?
they may have done some things on with government legislation and all that stuff, but really the waivers have always been there. It's kind of been up to Fannie Mae and Freddie Mac
Oh,
on who gets a waiver, kind of the algorithms that they put into the system. And I feel like those have drastically improved here as of late, because I think just like anything, like you had mentioned, you had alluded to 2008, what they're doing is they're also looking at the performance of these loans, to
mm-hmm.
make sure that they're not, losing out, or, nobody's really losing here. And I
Right.
think the studies have shown that really there is not a loser, in the whole thing. So it's like, hey, you know what, let's improve it a little bit more. And then,
Yeah.
given the coronavirus issues and everybody wanting to social distance, for good reason, hey, let's improve it even more. Like
Right.
you said, just making it user friendly and making sense. Learning from some things that happened back in the mid 2000s,
That's good.
using that, and
Yeah.
still improving the lending world.
Okay, cool. Well, I want to encourage everybody, if they do have lending questions, to reach out to you, Dave, and let's include your contact information and your email
I
in
appreciate
here.
that.
And then, like you said, he does do conventional FHA. Do you work with investors too?
I do. Yeah, we have.
Okay.
And actually, the one cool thing on investors is, kind of going back, a lot of your this is a little bit off topic, but I feel like it's worth mention.
Hmm.
A lot of places have limits on investors on how
Right.
many properties they can have financed at once. We go all the way up
Right.
to 10.
Well,
So
wow.
we can
I
have 10
actually thought
properties.
that limit was a national thing. It's not.
No,
The
it kind of, a
lender.
lot of those things kind
Hmm.
of boil down to behind the scenes investors and risk tolerances and things like that. And we're willing to go up that high. That's where a lot of them have, 5, 6, things like that.
7. Yeah.
We go a little bit more, which is that is a
That's
good
great.
thing. Yeah.
Yeah. That's wonderful.
So
And I
yeah,
know you do the loans, like a renovation loan. If somebody wants to do a big renovation at their house,
yeah,
they
it can
can
be
do that.
small. It can be as simple as a
Mhm.
bathroom. It can be, hey, you
Okay.
know what? I I hate this, hunter green bathroom or whatever with, just
The pink one.
whatever.
Yeah, the pink
Yes.
tiles and the yeah.
Yeah, who knows? Or, for example, right now I have a customer that is going through doing a renovation loan, and they are they're doing a complete septic replacement,
Oh,
and
wow.
they're putting on a new roof, not just the shingles, an actual whole on new roof. So
Wow.
that renovation product can be
That's a lot.
as small or as expansive as you want. And really the cool thing is that customer that's doing all those changes is really getting a house to where, if everything was on the up and up, you know, some customers couldn't afford that particular house, because when it's all fixed up, hey, you know what? But
Right.
they're getting a really, really good deal on the purchase price. And then they're
Nice.
able to put in some work, and the neighbors love it because the neighbors have their septic issue resolved.
Right.
And you know what I mean? And it's just,
Yeah.
it's a win for everybody, and it's a make sense product. So yeah, I appreciate you bringing that one up.
Awesome. Cool. Well, hey, thanks a lot for joining me today. It's interesting to talk some of these things out and talk about, what
Yeah,
does this new legislation mean? What are the good, the bad? Where did it even come from? So
sure.
I appreciate your perspective. Thanks a lot, Dave. Have a good day.
Yeah. Thank you so much for having me.